Tyler, what were you saying about? I asked you yesterday about the oil inventory thing because I saw the release of crude oil inventories and it was down 5 million barrels. I was like, oh, that's awesome, good for them. But then gasoline was up on 10 million barrels, and apparently that's bad, and I didn't even know about it.
I think this week we had like a 5% move in oil, and the biggest reason that anybody could come up with was the fact that gasoline inventories in the United States had gone up by 10 million barrels after the week previous data that did crude inventory barrels said that we were down 5%. So everybody got a little excited, like, yay, the turn's starting to come. And then they saw gasoline inventories up.
So what does that mean?
Like, let's just kind of keep this in a little bit in perspective here. So we'll say down 5 in crude, up 10 in gasoline. So we're net up 5.
Until that gasoline turns into CO2, it's still basically an oil stockpile.
It's some sort of petroleum stockpile. So we're net up 5. The United States burns through 15 million barrels a day of gasoline, diesel, anything that's made out of crude products. So we had an inventory build of 8 hours worth of production or 8 hours worth of consumption, and the market drops by 5%.
That just doesn't. That's insane.
I mean,
arguably,
it's one of those things where it's a law of large numbers where people say, oh, we had a inventory gain of 10 million barrels. And when you had 10 million barrels, like, holy cow, that's a lot of oil. But then when you put it in perspective of how much we consume and produce on any given day, it's not even a half a day's worth of consumption.
Right. So supposedly we're oversupplied in inventories by what, 200-300 million barrels, something like that. So that's a couple of months, right? Like,
that's the hope.
Yeah, I don't know. Anyway,
long-term focus. Decline rates are happening. There's no there's lack of investment.
Sandridge delisted.
So did they delist?
They're being taught.
They're pink sheets now, right?
It's in the process of being dislisted. So big names are coming.
Big names are falling
to the surface.
Right.
Production budgets are going down. It's not reinvesting. Decline rates are going to happen, and when that finally catches up. For our listeners who may not
know, really, like 30 seconds, what's a decline rate?
Decline rate is the natural decline of a well, where once you put a well into the ground and starts to produce, there is a fixed amount in that reservoir, and the rate at which it leaves, the pressure, the physical properties of that will deplete, and it means that the rate that's coming out of that declines.
It's like when you're emptying a pool, that last little bit of water
Imagine
does not come out fast.
The super steep water slide you were scared to go down at the water park.
That I'm still afraid to go down.
That's the decline of most fracked wells, where it's like,
it's like 70% or something. It's really
70% in the first year.
It's a frightening decline rate.
So as that decline rate happens, production will slow down. And demand they'll start to come into that equilibrium. Maybe demand will outpace for a little while, and prices will rise. We don't know where that balance is going to find again.
Estimates? Because we're down. I think we peaked out at like 9.6 million barrels a day in the U.S. of production. Or I think we're down to 9.1. Have you seen any estimates of where we'll be at the end of this? Okay, no big deal. I was just curious.
If we did, are we going to put any way into it?